Ladies and gentlemen, good day and welcome to the Q3 FY24 earnings conference call of Star Cement Limited, hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone telephone. If you wish to Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Dharmesh Shah from Emkay Global Financial Services Limited. Thank you, and over to you, Mr. Dharmesh, sir.
Thanks, Mano. On the call, we have with us Mr. Tushar Bhajanka, Deputy Managing Director, Mr. Vinit Tiwari, CEO, and Mr. Manoj Agarwal, CFO of the company. I will now hand over the floor to the management for their opening remarks, which will be followed by an interactive Q&A. Thank you, and over to you, Tushar.
So good afternoon all. My name is Tushar Bhajanka and I'm the Deputy MD of Star Cement. I would like to welcome you all to the earnings call of Quarter 3. I have the CEO and CFO of the company with me. The CFO will give out the numbers of Quarter 3 and then we can have a Q&A session. Thank you.
Yeah. Hi friends, this is Manoj Agarwal, CFO of the company. I, on behalf of Star Cement Limited, welcome you all to our Concall for discussing our number of Q3 FY24 and followed by 9-month number for the period ended December 23. I would like to clarify that we are discussing the historical numbers and there is no invitation to invest. Having said that now, I will just take you through the Q3 number followed by 9-month number. Starting from clinker production, during the quarter ended December 23, we have produced 7.37 lakhs ton of clinker as against 7.39 lakhs ton same quarter last year. So far as cement production is concerned, we have produced 9.82 lakhs ton this quarter as against 9.22 lakhs ton same quarter last year. Now I will take you through sales volume. During the quarter we had sold 9.6 lakhs ton of cement and 0.03 lakhs ton of clinker as against 9.08 lakhs ton of cement same quarter last year. There was no clinker sale last year. There is a growth of 7% in cement sale, that is as far as cement and clinker sale is concerned. As far as geographical distribution of cement is concerned, in Northeast we have sold around 7.32 lakhs ton as against 6.62 lakhs ton during same quarter last year. And as far as outside Northeast cement is concerned, we have sold 2.38 lakhs ton of cement as against 2.45 lakhs ton same quarter last year. In terms of blend mix, it is 10% of OPC and rest is PPC. These are the quantitative number of the quarter. Now I will take you through the financials. The total revenue figure this quarter is around 655 crore as against 629 crore same period last year. As far as EBITDA figure is concerned, this quarter we have done an EBITDA of 153 crore as against 120 crore last year. Profit after tax is 74 crore as against 53 crore in the same period last year. On per ton EBITDA basis, it is 1576 during the quarter as against 1324 per ton same quarter last year. This is what our quarterly numbers of quarter. The total revenue figure of the 9 months ended December 23 is around 1975 crore as against 1769 crore same period last year. As far as EBITDA figure is concerned, during 9 months ended December 23, we have done an EBITDA of around 395 crore as against 342 crore last year. PAT is 207 crore as against 151 crore in the same period last year. On per ton EBITDA front, it is 1304 during the 9 months ended December 23 as against 1229 per ton same period last year. These are our quarterly and 9 months ended figure. Now I would request all of you that you have any query, then I will request Dharmesh to moderate the query wherever it requires. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, and congratulations on a good set of numbers, particularly on the profitability front. Sir, before asking questions on volume and the pricing and profitability, first wanted to understand in terms of our expansion and the CapEx. So our 3 MTPA clinker at Meghalaya were supposed to start in February, and 2 MTPA Guwahati were supposed to start in December, and Silchar so obviously in September. So what's the new timeline when these 3 units are going to start?
Yes. So, the Guwahati grinding unit, we've already started taking some initial trials, and we should be commissioning the plant on the 1st of March next month. For the clinker plant, we will be commissioning the clinker plant on the 31st of March next month. And for the grinding unit in Silchar, that would be about August to September next calendar year.
Okay. And any specific reason why there is a delay for this clinker and particularly the Guwahati grinding unit?
Yes. So I think it took us more time in the trials and to and some of the critical delivery of a few of the machinery, and that is why we got delayed by a month. But I think we have already started taking the trial, and I think we are all set to commission the plant by 1st of March. I don't think there's any difficulty in that.
Okay. Secondly, in terms of the capex for all these 3 specifically, so clinker, we were supposed to do a capex of 1,300 odd crore, for Silchar to 500 crore, and for Guwahati 450 odd crore. So out of this, how much capex we have already done, and what is remaining to be done in the fourth quarter, and what about the next year FY25 capex?
Okay. So in Guwahati, we've already till December we had spent about 330 crores, in erecting the plant. There is a capex of about 55 crores more that we will be doing in quarter 4. This is for the Guwahati plant. Our expected cost, the capex that we thought for the Guwahati plant is now coming to be lower than what we had estimated earlier. So we had estimated, I think, about 430 crores. 400 crores. So there's a disturbance in the call.
Sorry, yes sir, go ahead.
Yeah, so I was saying that the capex that we had thought for Guwahati was about 430 crores. We are going to finish the project, and below that amount, the capex should be about 385 crores. 330 crores is already spent till December, and 55 would be spent in quarter 4 for this year. This is Guwahati. In Lumshnong, the capex was about 1,300 crores. We had till December we had already spent 850 crores. In quarter 4 we plan to spend about 200 crores, and in quarter 1 of next financial year we'll be spending about 200 more crores. So in total, we plan to complete the Lumshnong clinker project in 1,250 crores versus the 1,300 crores that was expected.
Okay, and for Silchar, so the cost was 500 odd crores. So how much we have spent, and is it also revised down?
So Silchar, we have just focused on buying the land till now. So we have spent about 20 crores in total in just buying the land, and we are taking out the permissions. I think because cost of steel and 2-3 other items have reduced, so we would revise the capex downward from 520 crores to I think about 450 crores, but I would need to confirm that with the team. So that would be confirmed in the next investor call.
Okay, got it. Now on the volume front, so we were looking at 13 to 14% kind of volume growth for this year, done 9%. So the ask rate for the fourth quarter is close to 22 odd percent. So what's the revised number for the volume for this year? And once this Guwahati and clinker will start. So next year, how one can look at in terms of the volume growth?
Okay. So, Sandeep Tiwari this side. So, as far as growth is concerned, what we anticipated, the growth in quarter 4 was not in line. I think the industry growth was quite subdued. And we can relate it to because the quarter 1, which normally monsoon, which sets in early in Northeast, didn't set early. So, first quarter was almost 25% industry growth. Quarter 2 industry growth was almost flat. And in quarter 3, Northeast industry growth was pretty subdued to around 3% level. Vis-a-vis that, we've been able to, in Northeast per se, we will talk about, we've been able to grow by close to 10%. And as an organization, 7% because of the outside Northeast factor. Going forward, if we are looking at definitely the growth, somewhere we are expecting in quarter 4 to be in line with somewhere around 5-7% maybe for the industry, and we expect to grow again close to around 8-10% in quarter 4. As far as next financial year concerned, since we are coming up with a 2 million ton Guwahati, which is all trial production as informed by the Deputy MD, that trial production already started. And for all purpose, that plant will start giving us material from 1st of March. So next year we have this 2 million ton extra. I think we were quite strained for material during the year. If we talk about logically, we will sell every ton of cement every ton of clinker will get converted to cement, whatever we have produced this year, and we will be able to sell that before 31st March. So next year we have additional volume, so we look forward to a pretty aggressive growth. As far as Star is concerned, we will definitely look forward for a pretty aggressive growth, and we are very sure of doing a growth somewhere in the range of 18-20% next year.
Okay, that's great. Second, just a couple of data points. Premium share for this quarter, lead distance, and how about the profit prices in January until February?
Okay, so if you talk about pricing, so in case of Northeast, there has been an improvement in the pricing. Although outside Northeast, there is a drop in the pricing. So in Northeast, in quarter 3, we'll talk about per se, and the pricing has improved by close to 7 rupees. But outside Northeast, like in Bengal and Bihar, there is a drop in prices, almost by 15-20 rupees drop in Bihar, and similarly around 20 rupees drop in Bengal. So this is what we have seen vis-a-vis quarter 2. As far as the premium percentage is concerned, so we have our premium percentage has improved to 6.5% vis-a-vis 4.5% of the same quarter last year, and the growth in premium in quarter 3 has been 47%. So that has been the focus area, and the growth has been reasonably well there.
Yeah. Go ahead, sir.
Lead distance has been 215.
Okay, and trade share was how much for this quarter?
Come again?
Trade share for this quarter was how much, and our Kcal fuel cost?
Okay, 87%.
And Kcal for this quarter, fuel cost?
Fuel cost for this quarter has been 1.75.
And for next quarter, do we expect some further possibility of reduction?
We expect to be around 1.7.
Okay. And fuel mix for this quarter, third quarter, how much was contracted coal, Nagaland, biomass, and FSA?
FSA was around 12%, biomass was around 7%, Nagaland was 26%, and the spot auction coal was around 55%. If you talk about it was around 7% in clean, and for MP around 13%.
Okay. Thank you. And lastly, for net debt, if you can give the number.
For
net cash. Net cash as on December.
Yeah. So currently we are about 116 crores in positives, so we do not have any debt. But what we see is that in quarter 4 we would have to take a debt of about 150 crores, and in quarter 1 we'll have to take a debt of about another 100 crores. In total, by end of quarter one, we'll have a debt of about 250 crores, which would need to be paid in the coming quarters after that.
Okay. Thank you and all the best, sir.
Thank you.
Thank you, sir. A reminder to all participants, you may press star and one to ask questions. We have our next question from the line of Mahesh Bardang from Centrum Broking. Please go ahead.
Hi, good afternoon, sir, and thank you for the opportunity. And congrats on good set of numbers. Sir, my question is on the market size of Northeast. So, we are adding 2 million ton now and another 2 million ton grinding unit later in, say, in 2025. So how fast can we ramp this up? Do we have to aggressively take market share from incumbent players to get that kind of volumes? Or do you think that basically that if the region grows at, say, 7 to 8% or even 9%, we would still be able to ramp up the plant faster?
Okay, so if you look at Northeast, there are players who are coming from outside who sell close to around 1.8 to 2 million tons of cement comes from outside via rig players who dump cement in Northeast primarily.
Right.
Then there is a natural market growth. And from the Star perspective, if you will look at, we are very high on trade. So non-trade has been one segment which we have left. Further non-trade, there are big projects which are coming up in Northeast, which you all must be aware about, are getting announced. Some hydropower projects are coming up. Some big bridge projects are coming up. So we expect that the institutional demand, which was also good in the recent past also, it should remain good and buoyant. And that is a segment which is slightly untouched for us. We will be getting aggressively into that segment. Secondly, if we look into going forward as far as the volumes are concerned, we have these outside players whom we have not competed with. Reason for that has been the volumes which we had. We were selling that volumes. So we have opportunity to compete with them and to take that share as well. And lastly, surely we have to take our market share from the existing players also, because that's where our volume will come from.
Okay. And sir, the related question to that is basically we have seen that the demand in the eastern region, specifically in Bihar, West Bengal, Jharkhand, has been very low, and that has resulted in, since October, we have seen pricing slide in those regions. So has that influx increased compared to earlier, from east to northeast?
No, I will not say it has increased. Rather, if we talk about the recent past, it has decreased because rake availability also gets challenged at this period of time. So the 2-point rakes availability has been challenged. So I think the influx, if we talk about the recent past, it has been lower. Yes, it increased over the year. If you talk about, there is an increase over last year in that volume. But in this quarter, we don't see that to be on a very high side.
Okay. And sir, I think last quarter we did our fuel cost was around 1.9 per kcal, and which has come down significantly to 1.57. So what changed? What was the key change here in terms of what led to this decline?
It is 1.75, not 1.57.
Oh, it is 1.75. Okay.
Yeah.
Okay.
So we informed last time we have an inventory, which now with the coal prices going down, the inventory is going down. As of the lower price, inventory is coming up, so that's how it was placed.
Okay, sir. Thank you. I'll just come back in case I have a question.
Thank you.
A reminder to all participants, you may press star and one to ask questions. A reminder to all participants, you may press star and one to ask questions. We have our next question from the line of Chirag Sidhwa from MK Global Financial Services Limited. Please go ahead.
Yeah, thank you very much. Am I audible?
Yes, sir, you are audible.
Yeah, sir, just a couple of questions. First, one is of a longer-term target. So in the previous call, we had indicated that post our commissioning of the current capacities, we are eventually targeting a 20 million ton kind of a thing in the next 10 years. So any color on the same? Have we kind of indicated a roadmap or something on that?
Yeah, so I think we are still working on it, but I think we've progressed fairly well in that direction. So we are, currently working out on a mine in south and also a mine in north in Rajasthan. And I'm still unable to share the information because I think we are still in the talks. But it is going to be a greenfield expansion. We'll be buying the mines and then we'll be putting up a plant, or we'll be getting mines and auction and then we'll be putting up a plant. So I can't shed much light right now because it's a bit tricky at the moment. But I think by next quarter we should have possession of at least one mine in either of these locations, and we can then discuss, more in detail about how we plan to grow. But yes, our target remains that in the next 7-8 years, we'd want to be a 20. By end of this decade, we'd want to be a 20 million ton company or more.
Sure. So mostly it will be kind of an organic expansion, not looking for inorganic at the moment.
Yeah, because I think most of the inorganic opportunities which are floating around in the industry are very big for our size. The smaller players, in South are at the moment not willing to sell, and there is no small player left in Rajasthan or East. So from that perspective, we are focusing on growing organically. Of course, the mines may be bought inorganically, but then we'll put up a big plant in those locations. So this is what we are working out on, and this is broadly what we are progressing with.
Sure, sir. That was helpful, sir. And one more question, sir. While our grinding unit is being commissioned 1st of March, while our clinker unit is coming a month or so later, so where are we planning to source our clinker till that period, during that gap? Because if I'm not wrong, our clinker capacity is more or less utilized at optimum levels. So till that time, till our clinker gets commissioning and gets starting, from where will we be sourcing our clinker for the Guwahati grinding?
Okay. So if you look at as Deputy MD informed that we are expecting 31st March our clinker to start, so it's only a matter of a month, 45 days, and I think we have conserved clinker during the year to take care of our production from that unit in the month of March.
Yeah. So we have about 1.8 lakh tons of clinker stock right now, and our kilns are producing at full capacity as we speak. So we do expect, the stock to help us in running our new plant as well. Of course, the new plant will also not run at 100% capacity from the very start. It will take time to ramp up because of the demand as well. So I think it should not be a problem. And, in April, our new plant should start producing. So then the clinker shortage will not happen any which way.
Okay. Sure, sir. And so just lastly, if I may, on the prices, we saw Northeastern region witnessing 7 to 8 rupees kind of a price increase in the third quarter. So what have been the trends for the month of Jan from Q3 exit levels? Are they at similar levels or have we seen a decline? And similar for the eastern regions from Q3 exit in the month of Jan? That'll be it.
More or less it is in a status quo situation. But in quarter 4, we may see a 5 rupee a bag price pressure on prices may be there. But more or less till now it remained stable as it was in December.
Okay. Sure. Thank you.
A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Uttam Kumar from Axis Securities Limited. Please go ahead.
Yeah, thanks for the opportunity, sir, and congratulations on very good set of numbers. My question pertains to Siliguri unit. So, sir, what was our capacity utilization during this quarter for this unit?
Our capacity utilization was around 47-48%.
Okay, sir, and how do you see this panning out in quarter 4?
In quarter 4, it will be better. I think it should be at around 52%.
Okay, sir, because normally, sir, this plant has not been operating more than 60%. So last March, it was around 60%. So when can we see the capacity utilization of this plant moving ahead?
So I mean, we did not try to grow in East, outside Northeast much because we had a shortage of clinker. And outside Northeast is a low price zone for us where we do not earn as much margins because one thing is the price reduces and the second thing is that the logistics cost is also high for us. So our margins are very low in outside Northeast. So that's why, we never try to utilize our remaining clinker to grow outside Northeast. Once we get the clinker plant, we'll definitely start pushing our material outwards as well. And then we can see a better utilization of LCU.
Okay. And sir, we were also looking to develop logistics for fly ash transportation for the Siliguri unit. So what is the status on that?
The project is underway since it requires some permission from railways. So the work is on, and very soon we are expecting those permission to come in. Once those permission comes in, I think then we will be able to place the orders for those wagons, and which has a lead time of close to 10-12 months to get. So we are expecting that project to get commissioned by April next year only.
Okay. And sir, what is the status of AAC block in Guwahati?
That project is also on. I think the land work has been completed. Machinery, all orders have been placed, and we are expecting that project also to commission by August.
August?
Yeah.
This financial year?
Yes, this financial year.
Okay. And sir, what is normally margin that we get in AC by selling AC blocks?
So, the margins in Northeast are very healthy because right now there's a shortage of AAC blocks in Northeast. The capacity that we're coming up with and the technology that we're coming up with will allow us the margins of about 25%, and the ROCE of that project would be about 20%.
Okay. And sir, you said premium cement is around 6.5% this quarter. So how do you see this premium cement portion of premium cement moving ahead? 10-15%, in how much time you are planning for that?
I think premium agenda is one of our core agendas and rather one of our biggest agenda for our volume push as well. So from where we stand today, we look forward to double ourselves by the end of next financial year.
Okay. Okay, sir. That's all from my side, and all the best to all of you.
Thank you, sir. We have our next question from the line of Aditya Chheda from InCred Asset Management. Please go ahead.
Hello. Good afternoon. So I have two questions. One, if you can quantify the incentive structure which you are supposed to accrue from the new plant which are due to commission soon, and if there are any other internal efficiencies which are going to help the overall EBITDA per ton for the company, and if you can quantify the same for me.
Yeah.
Thank you.
So,
these are the only questions.
Yeah. So I think good question. So basically, we are supposed to get a SGST benefit in Guwahati, the new grinding unit. So first, we'll have to adjust the input credit of the capex that we did in Guwahati plant. That so if we suppose commission the Guwahati plant by 1st of March, then the first 2 to 2.5 months it will take to utilize the input credit that we'll get on the SGST that we spent on the project. After that, we'll start getting the SGST benefit. That is subject to 200% of the fixed capital investment that we make in the grinding unit, and it would be per ton wise, it would be about 800 rupees per ton of benefit, and that we'll get on about 2 million ton, which is the capacity of the new grinding unit. So that basically would mean that in on a yearly basis we would get about 150 to 160 crores of SGST benefit from that plant for the next at least 5-6 years, and this would also be true for the Silchar plant whenever it comes. The second would be that in the clinker plant, we are expanding in the clinker, in SCL, which is the mother company, and we are going from a 0.8 million ton, which is the current capacity of SCL, to a 3.3 million tons we are adding. And on the 3.3 million tons till 2027, we should be getting IGST benefit on the clinker, which would materialize to about 300 rupees on the clinker, 300 rupees per ton on the clinker, on that volume that we produce, which is, with the new capacity, it will be about 3 million. So these are two subsidy benefits that we are getting. In terms of the efficiency, the new clinker plant would of course have a lower heat rate than the two lines that we have currently. Right now, we expect the heat rate to fall by about 40 to 45 kcal to about 690 to 700 heat rate. And we also expect some savings on the power because again of new technology and the size. And then we also expect some savings on the fixed cost as we'll be not operating the smallest plant and operating the biggest one, which will have some synergies in terms of manpower and administrative cost. So these are the synergies that we expect from the cost side. The other synergy that we expect from the cost side is also that during season we have to normally dispatch from our Siliguri plant and Lumshnong plant to compensate for our Guwahati plant because of the capacity constraints. But with the new capacity coming in Guwahati, we will also have the advantage that we can serve the market from L1 location, and we do not need to necessarily make deviations there because of capacity constraints. So I think that will also have an indirect benefit in the costing. The third main benefit is in taxation. So our Guwahati plant will be commencing before 2024 March, and it will be getting a taxation benefit in the sense that it will be at a lower tax bracket, not 25% but 17%. And most of our profit would be actually 50% or 40% of our overall profit will be coming from the new Guwahati plant because of the subsidy and because we'll be utilizing that at full capacity and taking care of well in our own plant. So from that perspective, there will be also a benefit in the taxation that we see. So these are the three main benefits that we see with the expansion, besides of course the fact that we can grow, as Vinitji said, that we'll be targeting a 20% growth. So that is of course the main reason why we expanded, and that benefit will come. But these are the other side benefits that will help us.
Perfect. Thank you for the elaborate answer. Just one clarification, the SGST benefits, the cash accrues with a lag, or how does that work? If you can just...
It works with a quarter's lag normally. So suppose this quarter's GST would be received after a quarter. So right, so there's normally a 3-4 month lag, but in the past also we've been very efficient in making sure that we do get the money in our bank.
Got it. That's it from my end. Thank you.
Thank you, sir. We have our next question from the line of Parth Bhavsar from Investec. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on good set of number. Sir, the first thing I just wanted to clarify that the SGST benefit of 200% at Guwahati, you said 100 to 150 crore benefit over 5 to 7 years. Is that correct?
No, I said 150 crores benefit every year for the next 5 to 7 years from Guwahati plant alone, and then also the same will be repeated in the Silchar plant from next year onwards.
150 crores annually for 5 to 7 years. Perfect.
Yeah.
Okay. And sir, just wanted to know what sort of incentives did we accrue during the quarter?
So in the quarter, we have just accrued 6 crores from the IGST benefit in the SCL plant, which we get on the clinker.
Okay.
And just to also, just on that point, I would like to clarify that we have done a EBITDA of 153 crores versus a 120 crores last year, same quarter. Even though last year we had a subsidy benefit of 38 crores which is only 6 crores this quarter. So the profitability, if you look at on operational basis, has actually gone from 85 crores to 86 crores to 147 crores, if you look at the operational EBITDA. So I think from that perspective, there is a sizable increase in the EBITDA when you actually exclude the subsidy benefit, which was there last year, but which was not so much there this year.
So the IGST benefit was clinker unit SCL, right? You said?
Yeah, that was the IGST benefit, which was only 6 crores, and last year the overall benefit was 38 crores.
Okay. So everything that we see is from the operations itself. Okay.
Yeah, everything broadly is from operations basically. Yeah.
Right. And sir, when are these benefits getting exhausted at the IGST benefit of 6 crores? Is it getting exhausted anytime soon?
No, so it's getting exhausted in 2027 end.
2027 end. Okay. Great. And sir, one other question I had on the existing and the announced capex capacities that you've announced. Just wanted to understand what are the lower hanging fruits in terms of brownfield expansion if you want to go for the 20 million tons of capacity. Are there any low hanging fruits in terms of brownfield expansion?
So I think because we have already taken so much capex in Northeast, putting up a 3.3 million ton clinker plant and 4 million tons of grinding unit.
Right.
I think for the next 4 years or 5 years, we would not need any expansion in Northeast. Of course, we will be looking. We'll already be planning to set up, our new location for the clinker plant, and we'll start with that work. But for the next 4 years, I do not think there will be a requirement for more clinker. So the natural progression would be to step outward, and we are looking at mines in south, how I said.
Right.
Rajasthan. But those will be like greenfield expansion. I don't think there's any soft, easy answer to that. I think we'll have to go for a greenfield expansion, and we'll have to grow outside Northeast as well. Of course, with healthy cash flows coming from Northeast.
Right. But I understand that you won't go for any expansion in Northeast over the next 5 years. But do you have such opportunities if in future the market grows in Northeast or East? Do we have such opportunities?
If the market grows, then definitely. We want to grow with the market, and we want a 30% market share in Northeast. Right? That is very, very clear. Right now, we may be having about 24-25%. We are aiming at a 30-32% market share in Northeast. Right? If the market grows more than that, if there's more infrastructure spend in Northeast than what it is right now, we'll definitely want to grow and make sure that we are there to utilize that opportunity as much as possible. Right. We are also open to having inorganic growth opportunity in Northeast if any of the smaller players would want to sell. But right now, from our understanding, no one really wants to sell. So from that perspective, I think we'll definitely be up for it whenever the opportunity does come.
Perfect. Fair enough, sir. Thank you so much for answering my questions.
Thank you, sir. We have our next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you for the opportunity again. Sir, just a couple of things. First, in terms of the once this clinker and the grinding will start by March, so the next year when we are saying 18-20% kind of a growth, so how one can look at in terms of the first year utilization? Because this is also connected to the incentive that we are looking at 150-160 odd crore. So is it fair that in the first year we can have a closer to 50% kind of utilization, and by next year we can have our 70-75% kind of utilization?
So I think one thing is that the subsidy benefit is not linked to how we utilize the new capacity, right? Because we can always produce from a new plant, though the existing volume. So I don't think it's connected to the subsidy. But to just answer your question, the utilization of the new capacity. So suppose we are setting up a 3.3 million ton clinker plant. So we plan to utilize that plant at about 50% capacity. Most of the utilization will come from the sale of cement, because we plan to go at about 20 And some of that growth, some of the utilization will come from selling clinker.
Okay. So and then at the grinding level also the similar kind of a 50% kind of a utilization one can look at. So from 2 million ton one can look at a 1 million ton kind of a volume.
Yeah, so I think the target that we are setting is of about, if we plan to do about 4.4 million tons this year and we're talking about a 20% growth, then we are talking about more than a 1 million ton growth in the cement production as well, right? So we are talking about 1.2 to 1.3 million ton growth in the cement production, right? So that will of course come from a grinding unit in Jiju because we do not have capacity in Northeast otherwise. So we plan to utilize the new capacity of Jiju by about 60 to 70%, and overall capacity utilization will be high because other grinding units we are utilizing any which ways.
Okay. Got it. So even if, as you mentioned, just to clarifying again, even if we let's say utilize 50% clinker and 60-70% grinding, despite that the incentive 150-160 crore will definitely be flowing to the P&L.
No, agreed. Because what we do is that we'll because we also have to take some shutdown in our old plant, right? Because we need to do some repair work. So what we do is that even the volume which the old plant is doing, we'll start doing from a new plant.
Okay. So I don't know. I was trying to understand. Will it let's say if we have a 1.2, 1.3 million ton volume from the grinding unit, so SGST benefit 800 rupees per ton will be multiplied to that, or is it because you mentioned it?
No, what I'm trying to say is that the new plant will be operating at full capacity, right? The old plant will be operating at 1.2 million ton capacity then.
Okay.
SGST benefit any which ways.
Okay. Got it. And second, any I understand that it is too early, but in terms of your Rajasthan greenfield, broadly, if one understand, will it be a kind of a only max to max a kind of a 2 million ton kind of a capacity that in the first phase we can think of to go ahead with?
Yeah, so I think I said that we are looking at the opportunity very closely in South and Rajasthan. We are yet to lock at least one of the two opportunities. So if we do lock that opportunity, we are looking to grow. We are looking to put up a 2.5 million ton clinker plant, and simultaneously the grinding units accordingly. Right. So yeah, you can be looking at around that kind of a capex happening in the next 2-3 years. Yes.
Okay. So broadly in terms of how one can look at let's say it's a 2.5 million ton clinker and maybe a 3.5-4 million ton is a grinding. If we are looking at, will it be a closer to a kind of a 2,500 crore kind of a capex that one can think of because it is a greenfield?
Yeah, it will be about 2,500 crore kind of a capex over the year. Over the next 2.5 years, it will be a 2,500 crore capex.
Okay. And anything broadly for this quarter, if somebody looks at definitely. So now for the incentive will be start flowing in P&L. Our profitability will start again, still improving from here on. But for the third quarter, if I have to look at in terms of the profitability, Northeast versus East, because last quarter we have talked about it is kind of a 300 rupees kind of a profitability in the outside Northeast. So was the number same for this quarter?
Yeah, so the numbers were about 300 rupees in outside Northeast and about 1,800 in Northeast and 300 outside Northeast.
Okay. Got it. Thank you and all the best.
Thank you.
Thank you, sir. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Rajesh Kumar from HDFC Securities. Please go ahead.
Hi sir, good evening and congratulations on good set of numbers. My question pertains to first this outside Northeast expansions which you're talking about, and probably 10 million ton capacity enhancement over next 4 to 5 years. And if I do, because these would largely be greenfield, so, 10 million ton would entail around 8,000 crore capex. And, how do you plan to fund this? Because, that could be quite sizable from the current balance sheet and the operating cash flows which the company would be making from the Northeast operations.
Yeah, so I think, we plan to add about 10 million tons. Besides the plan that we've already been working on, we plan to add 10 million tons. That's a target for 2030. We have about 6 years. Right, so I think function of it is, of course, our own accrual, which we think are going to be very healthy in the coming years. Right, because of the GST benefit, because of the market in Northeast, and because of all the efficiencies which will come along with that new capacities. And the other would be, other ways of raising finance, right, which may be at some point, raising money from the market, depending on the opportunity and the size of opportunity which comes. Right, so I think as a family we are very flexible in, in availing those opportunities, and we do not want to, hamper the growth of the company for the lack of finance. So, whenever we do need finance, we'll make prudent choices in financing it, so that, the company is risk-free. At the same time, we are able to march towards what we're targeting.
Okay. And sir, in the you talked about incentives on both the grinding units, but on clinker plant, is there any clarity which has come through what sort of incentives may accrue when you commission it by March end, and so next financial year one should look at?
Yeah, so I think we are looking at a benefit of 300 rupees per ton on the clinker that we produce from the new clinker plant. And what we would try is to make sure that we utilize the new clinker plant as much as possible, not only because of this benefit, but because it is more efficient to run the bigger clinker plant rather than the smaller one.
Right. So it is on production basis only, right? And not, to which unit, where you are selling this clinker to?
No, it is based on the production only.
Okay. And Silchar, the incentive would be linked to sales in?
No, this will be linked. This is IGST benefit.
Correct. No. Clinker I understood. The Silchar grinding unit next year.
So this will be linked in Assam as well. So that will be a SGST benefit in Assam.
So how are you looking at the Assam market? Because you have 3 million ton which you would be ramping up, and what is the market size of Assam market, and for you to maximize the benefit, how much sale you need to?
So this year, for example, we'll be doing about 18 lakh tons of sales in Assam alone.
Okay.
The coming financial year, I'm targeting to grow by about 20%.
Okay. Around 2.2, 2.3.
Yeah, so 2.2, 2.3 it will reach to, right?
Okay.
I'm planning to get the grinding unit in the next financial year, next financial year, right?
So FY26 end it will be there.
Yeah, so FY26, September it should be there, August to September, right? So by that time, my sales should be about 2.6 million tons in Assam alone.
And what would be the market size of Assam, sir?
The market size of Assam is about 65% of the Northeast market. So
which would be 5 million tons? 5 million?
7 to 7.5 million tons.
Total market size you're saying, right?
Yeah, of Assam, yeah.
No, Assam you're saying 7.5 million ton or 50? Northeast is how much you're looking at market?
About 13 million tons.
13 million tons, okay. So 7.5 million ton, and there you're looking to target around 2.5-3 million ton if you're optimizing both the units.
Yeah.
So 30-35%. So you're not going, looking to corner out significantly, and hence less risk to your numbers, right?
I'm sorry?
No. I think the market size is good enough for you to, efficiently sell your volume.
Yeah. Exactly.
Okay, great.
And the market will also be growing now.
Correct. Market is growing. From that perspective, I was looking at it. Okay. And lastly, this Q4, your incentives from the existing clinker unit, this IGST benefit will be going away, right? and next year you will have only the major incentives from the new unit.
No, so I mean, all the incentives which had to go are already gone.
Okay.
The incentives that we have of IGST, which was about 6 crores, will continue till 2027. Is the same benefit which is continuing in the new clinker plant also, because the new clinker plant is in the same company as the existing one. So the same benefit is actually passing on to the new clinker plant also, and that clinker plant will also have this benefit by till 2027.
Okay. Great. Great, sir. That's all from my end for now. Thank you. All the best.
Thank you.
Thank you, sir. That was the last question for today, and I now hand the conference over to management for closing comments. Thank you, and over to you.
Oh, so I would just like to thank everyone, for asking questions, for showing the interest in the company, and for following up with the company over the few last 2 years. And we look forward to having more calls and more questions from you next time. If there's any question, any query that one has on the results, they can definitely reach out to the CFO and they can ask their queries. Happy to answer. Thank you.
On behalf of MK Global Financial Services Limited, that concludes this conference, and you may now disconnect your lines. Thank you.